Good morning, everybody. It's Tuesday, January 14th, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here at March corn down 1 3/4 at 474 3/4. March soybeans down 3 at 10.50, and March Chicago wheat was up 1 1/4 at 546 1/4. This morning, we had another export sales announcement out of China. 198,000 metric tons of soybeans to China there for 24. Good morning, guys. We saw a really big bump again in open interest from yesterday. Corn up 53,499. Funds continue to increase their net long position. This is as of last Tuesday, so by all estimations, we're getting into an even larger longer position here, certainly in the corn complex. So with that, Dustin, maybe a few thoughts to start this morning, and then we'll kick it around the room.
So we're still kind of post report, and in this world, I think that the story was quite bearish for a lot of people. And that was, we're going to have this record yield for corn, and all of this demand is front loaded, and Brazil's getting good weather, so they're going to come through with another massive crop, which they are expected to grow a big soybean crop. And then we got the biggest soybean yield draw in 25 years from Nov to Jan, and I think that really kind of screwed up a lot of people that just couldn't see a path to some sort of a friendly surprise on the report, and are now potentially receiving margin calls from this move, right? There's definitely a high conviction trade to be short beans, and I understand it too. I mean, we're even after that big drawdown in yield, we're still left with a fairly large supply, and we're still going to be competing with Brazil here in the next couple of months. You couple that with the fact that the Brazilian real is a couple percentage points off the low as well. And I think you're a little bit of a perfect storm of catching some shorts by surprise here, and that rebound in part is probably led by short covering, and we are hearing lots of stories of cash movement, basis dropping in a lot of areas. Of course, this is an exciting price for people that they haven't had in a while, so I imagine that's actually it's rallying in the face of that, which is really quite interesting.
And we did have a question overnight there. Does potential tariff policies concern anyone? I know we've talked about it quite a bit here, just as could call it pseudo black swan or something of that nature. But I guess we're getting closer. You're 6 days out here. What's your feeling?
Yeah, I mean, this is a big question for everybody. I think that's driven a lot of people as part of that bearish story. Is Trump's bearish, Trump's bearish. And I think we've said it for a while now. It's like it's really kind of 50-50, right? We have precedents before that. In part, trade tariffs were used as a negotiating tactic to get the phase one trade deal. So the main question, and I think this is not really clear from the administration yet, which is, are these increased tariffs meant to decouple our two largest economies, China and the U.S., and intended to kind of more, kind of move away from doing business with China, or are they used as a negotiating tactic to get a better deal? And I think that just the precedence of phase one is there to potentially say that, hey, they still might be there for negotiation, there as a negotiation tactic. That's been said many times by the administration. And what are the we're in an arms race for AI right now. What are the chances that the lowest hanging fruit that we can actually narrow the trade deficit with China is going to be ag first, right? And I still think it's a 50-50 chance that we actually come out of this in a positive note and not in a negative note. And the market's been trading it, I think, overwhelmingly from the negative side, because it's going to take time for that deal to get negotiated. But again, the precedence is there that it might actually lead to something very positive for commodity markets. Short answer, we don't know. I mean, I don't think anyone knows at this point how China's going to react.
Yeah, very good. Ben, what's on your mind?
I was just going to say, I agree with what Dustin says. No one really knows, but you can look at some ways to put in that floor pretty cheap. But I also think that he makes a great point about agriculture being a path to making things a little more equitable. And I think that's the clamoring with the kind of the harsh verbiage over the Panama Canal, right? There's a place where if we could get some more preferential rates, we might really be able to cut down on the freight disadvantage that South America has over us into China. So we tend to look at markets and kind of a squared, what is that? A squared plus B squared equals C squared, and markets don't work like that always. And this may be one of those cases. So it's an interesting time for sure. It's a good rally, but the things that we have done to supply through good usage and then cutting the yield, even though it was a record, from the perception hires, like those are things that we have to live with today, regardless of what happens with the trade war. So I don't want to jinx this or put the mush on it, but I almost feel like if we went into something like that, it might not be as harsh as people think, because our picture has changed dramatically in the last 2.5, 3 months.
Yeah, and I would make the point too is that 2018 was a much different world. Like the value, the purchasing power of the dollar was much stronger than it is today. Right? We went through a COVID extremely loose fiscal policy during that time frame. We printed so many more dollars into existence. We've felt the effects of that inflation since then. What happened though? Our world's largest buyer, which was also struck with ASF during that same time frame, literally slapped a 25% import tariff on us, and our shipments basically came to a halt. And our price for beans fell to $8.50. Our price for corn fell into the lower threes. But we were at a very abundant supply, and total global consumption was down during that time frame because of ASF. I think it's a little bit different to say, well, at the current stocks to use ratios globally outside of China, we don't really factor Chinese stocks as at face value of what the USDA is reporting. Total global supplies, especially on the corn and the wheat side, are not in the situation they were in 2018 going into this. So I think that the reaction to say, oh, well, we have precedents in 2018, it's definitely in the threes for corn and in the eights for beans. I don't know that we can comfortably say, well, that's definitely the outcome we're going to go to again, because we're just in a different scenario.
Yeah, it's a good point. Justin, what's on your mind this morning?
Yeah, I don't disagree. It's an unknown. Usually when you look at an event and try to correlate it, you're wrong for whatever reason. So yeah, I agree. I think China's economy is much weaker than it was back then too. So I don't know that they really want to go through another round of pain. They have their own issues. Currency, stock market, economy, growth, demographic issues that we've talked about. I think there's a good chance that they want to cut a deal. They partnered with Russia just because they felt like they had to, like they were backed into a corner. Russia, China. I think there's a good chance that they want to negotiate a deal and try to get themselves out of this kind of imploding economy that they have. So, Trump might give him a way out. I think there's a good chance he sticks, like, hey, we made a contract. I'm still, where's phase 1 and phase 2 at? Mm-hmm. And part of all this, Greenland, Canada, Gulf of America, this could just be another, good show of strength for these negotiations that, inevitably, I think he wants to have sooner than later. So to Dustin's previous point, it could be very friendly. I mean, the good news is that China doesn't have a lot on the books right now with U.S. It's not like they have 30 million tons on the books of corn or a massive, bean book of business on. Most of that's been done with South America. So, I don't think the risk of massive cancellations is high. So that's a positive. The biggest position right now is, Mexican corn position. So that's kind of a bigger question in my mind on how that plays out. But yeah, the 1.5 carryout and, 30 days of usage in the world, excluding China, 34 days, something like that, of corn. There's just not a lot of wiggle room for an issue. So if you were to get some kind of a demand bump there, it'd be pretty important. So
right, and like Chinese 10-year bonds are down to like 1.6%. right? It's just their interest rates are crashing. They're obviously, I would think, to your point, are probably more in the negotiating mood at the moment when we're going into arms race for AI than they are prepared to dig in their heels and fight on this.
Right. Yeah. I mean, they need to spur growth, so, and I think it'd be good for everybody if you figure out a way to do that in an equitable way for both countries. So I don't think either country wants to just go into constant battle. But I think you've got to even the playing field a little bit. And that, those tariffs, and let's be clear, those tariffs have never gone away. They've actually increased under Biden. So it's not like those were repealed and we're putting them back on. They've been dealing with those for a long time now. So, I think it'd be, probably more interesting than the China one personally would be Canada, the used cooking oil, how that's handled. There's some things there that could make it really bullish U.S. ag also. We import a lot of product from Canada, on veg oil side, gas, oil, crude oil.
Yeah.
So there's a lot of different ways that all these things could play out. It might not just be the obvious China that we were used to from round one. So, I think you got to keep an open mind.
Sure. From a hedging standpoint, guys, we're looking at new crop corn here, 456 here or so this morning. Kind of targets. I mean, what's our overall writing opinion on new crop corn, given this obviously a bump in cash, but the back end has moved a little bit slower, been a little bit slower to react.
Well, I could start there. I think, we're still under, by all means, profitable levels for a large majority of growers.
Mm-hmm.
Inputs, it looks like inputs may be going the other way, meaning higher, not lower, to justify this price. So it seems like the risk is to the upside on input costs potentially here. Energy has turned back up. Different export restrictions from major, fertilizer input dealers around the world. So we're certainly not, we've had a very nice rally. So we're still on the, it's not an attractive level in our opinion to get aggressively sold here. Outside of looking at technicals and saying it's going to go lower than this, from a margin standpoint, profitability standpoint, without knowing anything about the crop, it's hard to get super aggressive. That being said, I think we've talked about this a lot, is looking at, what you do have that's a benefit. Options are still relatively cheap. We're going into a crop insurance period with increased subsidy levels this year. So I think it's trying to find out how much money or insurance you want to use to protect the downside, bridge the gap to crop insurance, and figure out how all those pieces fit in, versus just saying, hey, we've had, X, cents per bushel rally, we need to sell it because, I think on beans, beans is more interesting to me, as you get from here, call it here to $11 or in this range. I don't want to lose sight of the fact that we are harvesting a record crop in Brazil. It's going to be a record. I think that now it's just trying to fine tune what that number actually is, but it's going to be a big crop. And if you look globally, beans aren't tight. It'd take a problem here. I think, obviously Argentina could still get dinged, but it's still going to be a really big crop. So new crop soybeans, in my opinion, are probably a better sale in this area to higher than corn. And that's just from a fundamental perspective and available supply. So actually interesting if you look at like the bean complex, and we talked about this at the report, like it makes sense running in shorts, turned up technically, the shorts got frustrated, they weren't getting paid. So all that makes sense. But I don't want to lose sight of, a massive crop coming our way in South America with a cheap currency. When this short covering or whatever, whether was yesterday or a week from now or, a month from now, don't want to lose sight that we have inverted markets with big supply in the U.S. still, or I'll call it adequate supply, 380, 400 carryout, and a big South American crop coming. So.
Yeah. Well, I was just thinking about, how and it makes sense why people are so, I think, kind of heated online about this, but like July Nova right now is 28 over on the open for beans. And it's not, I know this, a lot of that came post report because we had a biggest yield drawdown in 25 years for beans. But, you know, even going into the report, we were 10 over. So the market was telling us something going into it. And I think it's just kind of interesting to think like, maybe it does go back to like, you know, everyone's kind of, you know, short-term wondering why there's not enough flow. There's not, you know, that obviously processors, exporters, people want this. There's a reason why it's a 10 over spread inversion. And they just think, oh, it's going to continue to be filled with more beans out into the future. And I think that's true. But at the same point, I think it still goes back to like goods and services are not flowing very easily here. We had a strong basis for a lot of things like corn because growers are holding on tight to it. And it is no question that corn was well below cost production. I think it still is below cost production at average yields going forward. And maybe the world just needs to kind of reset as we start to get used to this lower real into the future. The Brazilians have kind of been counting on, you know, the currency ratio, you know, planting it at 5-1, harvesting it at 6-1. You know, the minute we have a period of stability and all those prices reset, you know, I don't necessarily think that these are sustainable prices at our new currency rate. We've lost purchasing power of the dollar, and I think the spreads are trying to tell us that. So, I mean, it's just kind of small observation that, like, you know, markets need to flow, and that they haven't been. So.
Yeah, no, very good. We just coming into the open here, Ryland. Real quick, we had a softer start to the week for cattle and managed money's liquidating hogs. So what else is going on in the meat complex?
Yeah, I mean, I think there's still quite a bit of optimism here, but obviously we're seeing some caution just before anything really starts to pick up here in cash. You know, managed money still continuing to buy cattle pretty aggressively, and yeah, as you stated, another aggressive liquidation in the hogs. But since then, we've seen the market really stage this nice little recovery. So it seems like there could be some opportunity here. Overall, it seems like we're putting the cart before the horse a little bit, but on the other hand, it seems like cash cutout starting to stabilize maybe a little bit. So I think that's something to keep an eye on through the rest of the week. See if we can get some more follow through. But on the other hand, it does look like things are starting to kind of stabilize for the most part on the cash side of things. So overall, just waiting for more cash indications here from the cattle market, and see if we can kind of stabilize in the hogs.
Beautiful. Thanks for the update. Just came into the open. March corn down 2 1/4 at 474 1/4. March soybeans down 3 1/2 now at 1049 1/2. And March Chicago wheat's up 1 1/4 at 546 1/4. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield and any of the special content that we may put out throughout the year. So be sure to click on the subscribe button. And again, thanks to everybody that supports the show. We're doing this live every day that the markets are open, streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.